Life sciences firm 10x Genomics began operations at its Singapore hub in late 2020. The US-based firm makes products that are used for COVID-19, cancer, and vaccine research. It occupies more than 53,000 square feet space at the Kallang industrial area, supporting corporate, commercial, and manufacturing activities for about 100 staff.
It's good to have all these functions together. This building was brand new, right? And it had everything that we wanted, accessibility, and a great location, and the infrastructure. Our suppliers are located around us. So in terms of securing the supply and delivering it on time, I think that's a great advantage.
The Singapore facility produces instruments, reagents, and consumables for global use. 10x Genomics also has a training laboratory.
We are thinking on to expanding manufacturing. We just expanded our distribution center. What you see here, this is not the end. We are just getting started.
There are more than 40 million square feet of dedicated life sciences spaces across Singapore.
The occupiers, they are looking for the modern facilities. They want the spaces with lab ready, floor plate should be flexible and regular, and has to closer to the public transportations. Amenities is equally important. But the latest trend, what we are seeing is occupiers are looking for sustainability features, such as lower energy consumptions, as well as green status.
CapitaLand Development, which has operated the Singapore Science Park since 1981, is looking to draw more life sciences firms by offering flexible infrastructure, co-working spaces, and a collaborative ecosystem.
Singapore Science Park is home to about 350 companies from a wide range of industries, such as biomedical sciences, flavors and fragrances, electronics, and technology. We also form strong industry collaborations with partners such as NUS Enterprise, whereby they focus on deep tech research and allow innovators and startups to come together to collaborate and exchange ideas.
Last year, CapitaLand Development formed a joint venture with Ascendus REIT to redevelop parts of Singapore Science Park into a life sciences and innovation hub worth 883 million Singapore dollars. The redevelopment, set for completion by 2025, will have 80,000 square meters of space for wet and dry lab activities and innovation research. Tenants at Science Park lease spaces for 3 to 5 years on average, with newer buildings seeing occupancy rates of close to 100%. Homegrown biotech firm Morexis runs an advanced diagnostic medical facility in one of them.
Early Medical Center brings together the best research institutions, medical device makers, as well as health products and services provider onto a single accessible platform to deliver what we call people-centric preventive care as well as a health screening.
In Asia, life sciences real estate remains at a nascent stage, but the region's aging demographics and rising healthcare demand are driving investments into the space.
Last year, globally, we had to record 18 billion of transactions. Total transaction in our region is only around 850 million. But the growth momentum has been significant, because if you look at 2018, the transaction volume was well below 100 million.
In Asia, a lot of occupiers and in fact real estate investors are still emerging in terms of how they're actually going to grow their footprint across the region in life science. And that can be across traditional pharmaceutical companies, it could be across medical manufacturing device companies, it could be across biotechnology, R&D. So there's a lot of different emerging factors in this region.
While the pandemic has sped up growth and opened up opportunities in life sciences, there are barriers to investing in this space.
We need to be very mindful of a potential decline for further investment coming from the venture capital. The second one is most important one is all about regulatory framework. There could be a major hurdles. We have identified 4 variable direct investment strategies for people to consider. The first one is sale and leaseback and disposals. The second strategy is asset conversions. The third one is a public-private partnership. The fourth one is all about asset development.
With a limited supply of specialized facilities coming on stream, analysts say demand for life sciences facilities will remain solid in the coming years.
There's going to be very strong rental growth drivers in the market. Quite often the tenants that we're seeing growing in life sciences require laboratory space, they require high-tech science labs, it can be wet labs. And because of that, they'd often take longer leases rather than the traditional short-term leases. For life science investors, there's a big opportunity to really partner with the operators and the occupiers of these specialised buildings